Firstly, but is the worst word in the dictionary. Okay, don't use but, because but is going to create the doubt about whether a candle can close bullish or bearish. Look at the charts here, right, on the 1 hour time frame. No, 4 hour you work with, right? Go to the 4 hour time frame. Tell me something. How many candles have closed bullish or bearish on this side? Don't count them. Is it not a lot, a little bit, or a lot?
Yeah, I'd say it's a lot.
Right. Now, you're trading two candle theory.
Yeah.
Okay. What is the idea behind the concept in one sentence?
Well, candle closed bearish, the next candle bearish, or
Fine.
closed bullish, next candle bullish.
Yeah, nice. You're on the money with that one. So this candle closed bearish. Did this candle
Yeah.
go bearish?
Yes.
This candle closed bullish. Did this candle go bullish?
Yes.
Okay. This candle closed bullish. Did this candle go bullish?
Yes.
This candle closed bullish. Did this candle close bullish?
Yes.
Okay. Now let's work on this for a second. Let's say every candle that closes bullish, you take the next candle as a buying opportunity. This means let's do this. This candle closed bearish. Did the next candle close bearish?
No.
Right. This candle closed bearish. Did the next candle close bearish?
No.
Okay. This candle closed bullish. Did the next candle close bullish?
No.
Okay. So now, based on those three trades, what are we down?
Down three and we're up
We're
more.
minus 3R. Okay.
Yeah.
Now, did this candle close bullish? Did this candle close bullish? The answer is yes. So let's put it at, we just go for 2R. Okay.
Yeah.
This candle closed bearish. Did the next candle go bearish? Yes. So we're up 2R. Let's not even go any further than this. So now we're minus 3R, but we had two winners because we're following the process. Now we're at plus 4R minus the 3 equals plus 1R. My question to you is, if you follow the process based on what I just shared with you, is this a positive expectancy concept?
Yes.
Fine. Now I can continue to prove that this works, but my question to you is, do you believe it works?
Yeah, no, I believe it works. I believe it. But my question is, see where
No,
you
I
on the
said
left.
don't. I said don't use but. Hold on a second. Just before we get there, because we have to build the belief, right? So just
Yeah.
bear with me, please, brother. You believe that it is a positive expectancy concept that works.
Yeah.
My question is, do you need to know how to make it work every single time?
No.
Right. Your responsibility as a trader, as a business owner, as an entrepreneur is to follow a process consistently over a period of time to eventually allow things to balance out in favor for you, specifically as a trader. You understand that?
Yeah.
Okay. So when you go away from the charts or over the weekend, or you get distracted by YouTube or another trading strategy, and or you lose a couple trades in a row, and or you have a bad week, and or you have a bad month, does that change the fact that this is still a positive expectancy concept that you believe in?
No.
It shouldn't. Okay. So once you're dialed in and you have that locked in, your only responsibility, Daniel, is to execute. Okay. So let's move on to the next point, execution. What is the key signal for you to take a trade and take a trade?
Well, I prefer to take 4 hour candles that have broken a level, like that one. See the top bearish candle there? One,
Okay,
two, three, four, five back. Like for example, that.
this one,
No, two more to the right.
this
To
one.
the right.
Okay,
No, to
okay,
the right. Go
this one.
down. Yeah, see how I sort of broke that level?
Okay, so
I prefer that one.
my question is why? Why does a candle need to break a level?
Just something that I've noticed that I like over the course of my trades. I've just had more winners when it's broken a level.
Okay, so going back to what you said, you had 3 months of consistency and then you lost again. So technically, it's not true what you're saying. What you like is not necessarily the right thing. I like
Yeah,
eating
well,
chocolate
that's
and
true.
crisp, but it's
Yeah,
not something that I should be eating every day if I want to, have a six pack and be hench. You understand?
yeah,
So what you like is not necessarily the right thing. And if you make something very specific, it almost becomes too rigid that you expect it to win all the time and it never does. And it's always the trades that you say, I would like to take, but I won't take because it's not part of my concept that always wins. And the trades that you say, this is part of my concept because it's perfectly set up now that you take, that doesn't win.
yeah,
So being too rigid is not going to help you, my friend. You have to open up and explore a little bit. Again,
Yeah, I agree with you there because that's when I changed that approach of my 5 minute entries. That's when I started to get some success, to be honest.
Fine. What times do you trade?
For me, it's the 3 p.m. candle. That's pretty much the pre-London candle.
And
Yeah,
how
I
many
trade,
pairs do you trade?
I think like six or no, five or six,
All right, fine.
but not at the same time. Just that's in my watch list.
Fine. Okay, but what ones do you trade the most?
I'll tell you, I got EU, GU, GJ Gold, and EJ.
Okay, you need to cut back to two or three. You got too many options to choose from. And if you got too many options to choose from, what is that going to create?
Confusion.
Uh-huh. Because you're going to say this pair looks better, or this trading opportunity on this pair looks better than this one. You're going to take the trade that loses, and the other pair you didn't take is going to end up winning. And then you're going to compare the two candles to try and figure out what one was best and what one was worse, causing a distraction or distracting you from the process, which is to execute after a candle's closed bullish or bearish period. It doesn't matter what the it looks like.
Yeah,
Okay. So you're always going to be switching teams. My advice to you is two, max three pairs. Simple. You show up at 3 p.m. pre-London. You check on all three pairs on the 4 hour time frame. Did this candle close bullish enough to convince me the next candle will be bullish? No. Did this one? No. Did this one? Yes. Fine. I'm sticking to this pair. Now let's dial in. This candle was closed bullish. This is a 50% retracement level. I'm not going to go beyond that. This is where the candle flips bullish. This is potentially where it could reject, or maybe not. I believe it's going to get back to here. And that's kind of your key indicators. Okay. That's it. There's no, oh, I don't like this candle because it's rejected and it's coming off this level. And I don't, the question is, did this candle close bullish enough for you to be convinced that the next candle will be bullish? I don't see why this doesn't convince you or me or anyone else why it couldn't continue bullish for the simple fact that the body is larger than the top wick.
so,
Okay.
when you said before, did it close bullish enough? Is that the rule of thumb? If the body is bigger than the wick,
Correct.
then it's closed bullish enough? Is that?
Correct.
Oh,
So we showed up. This is the pair I'm trading today, USD CAD. Okay. And notice I'm on USD CAD. You don't even trade it. Neither do I, but it just doesn't matter. Okay. Now, I would look at this and say the previous candle closed bullish enough to convince me that the next candle would be bullish. This is where the candle flips. I don't care where you put this, just this is where it's going to be green. Okay. Because you want to be entering 9 out of 10 times when a candle has flipped bullish in the direction that you believe it to go. So you're joining the moving train and you're not jumping in front of it. This is a 50% retracement level. Now, at this level here, we're saying to ourselves, you know what? If price goes beyond the 50% retracement level, I'm not going to take the trade because there is not enough bullish sentiment in the market for me to be convinced that it will continue higher. Then we come over to the 5 minute time frame. We say to ourselves, you could add this as a confluence. Is the overall weight of the market bullish? Well, we're going to know that from the 4H period because the previous candle closed bullish, but the answer on this occasion is yes. Okay. So now we're looking at the 10 o'clock candle. We're looking for the candle close, which is going to be this candle here. Okay. This is a candle
yeah,
close. This is where the candle flips bullish. You have two options. You can take it when the candle is flip bullish, which is my preferred option, or you can look for price to break a high. Now, once you get to this time frame, Daniel, I would not be concerned about what the 5 minute time frame looks like as I would be about making the decision on the 4H time frame.
yeah,
However, this is only going to come for experience, and I'm not going to be able to show you every single scenario from a 5 minute perspective. But let's say in this instance, you can see that there has been a consolidation. You have to first understand that this consolidation has only been developed because of the retracement of this 4H candle. So in theory, the market is still bullish. The behavior of the market is still bullish. The sentiment of the market is still bullish because the candle has closed bullish enough to convince us the next candle will be bullish. So there's two ways you can approach this. You can take it when the candle flips bullish, which is at this point, and go in aggressively, which is my preferred option, and say to yourself, the previous candle closed bullish. I know that the chances of the next candle being bullish is very high. And if I had a gun to my head and someone said, what do you think the next candle would be after the previous candle closed bullish? I'm very, 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 very rarely going to say it's going to be bearish because you're not a psychic. But your odds of having that gun to your head and turning around and saying it's going to be bullish because the overall weight of the market is bullish is going to be much higher. Now, it's not going to happen all of the time, But what I'm saying, in a very serious, ridiculous, outlandish situation like that, you were just going to say buys, period. Okay. You choose to take the trade when the candle flips bullish. So if you're looking on the 4H time frame now, you can see that that 4H candle is green. Yes or no?
Yeah.
The question is, has the development of this 4H candle has been developed? And what do I mean by being developed? Every candle needs to create a top and bottom wick. It won't do it every time, but 9 out of 10 times, 9.5 out of 10 times, it's going to create a bottom wick or a top wick. So when we
Yeah.
look at this here, we can see that the wick has been formed, right?
Yeah.
So that means that the development of this wick has been formed before it has pushed bullish. So once it pushes bullish, that means the development of this candle has been formed. This may sound like I'm talking a lot, but this is very important for you guys to understand, because if you're going to want to build an unshakable belief system about your process, you've got to understand this. Because these little intricacies are going to be the difference between what you believe in and what you don't believe in. So if I know that the development of a candle is wick first, body next, previous candle closed bullish, next candle will continue bullish, and it has created the bottom wick and it has flipped bullish at this point, what is there to think about? We take the trade, we place our stop loss where we're comfortable, and then we go for our target. And I would say for most of you, go for 1 to 2s just to start off with. And then you have a winning trade. Now, we already just proved it doesn't matter whether this wins or not, because we lost 3 trades and we was minus 3R. We won 2 and we was plus 1R. What happens when you come to the markets tomorrow, you focus on 1 or 2 pairs, you see this close bearish and you hit this and you take 2R, then you come back the next day and you see this close bullish and you take this and you hit another 2R, and then you're like, hold on, this close bullish, so I'm going to take a stab at this, and now you're up 4, you're up 6R. As much as you can have losing trades consecutively, why can't you have winning trades consecutively?
Yeah. True.
But we just don't know when they will come. But the only way to make sure that we're taking advantage of them when they do come, because we don't know when they're going to come, as long as we are doing what we have to do, we will be able to take advantage of them. The only traders or the only people that cannot take advantage of these opportunities are the traders that are not pressing the button. And that is why it's so vitally important that you understand your concept and your process and you just show up every single time and just press the damn button without allowing these stories to fester in your head and plague you with the worst case scenarios every single time. Your focus should be, what is my process? Let me execute on this. And that is that. Do you think a pilot gets in the plane before takeoff and says, God, please make this plane fly? Please make sure it stays in the air. Or do you think he knows in his head that I've seen hundreds of thousands and hundreds of thousands and hundreds of thousands, and I know based on statistics that it's much safer to be in a plane than it is to be in a car, that this plane is going to take off and it is going to soar and it is going to get me to the destination. Otherwise, if he doesn't think like that, then he's just going to put every passenger at risk, himself at risk, faint, have a heart attack, have an anxiety attack, whatever it may be, maybe not a heart attack, but anxiety attack, panic attack in the sky, and what? Lose control. I mean, I know planes don't just fall out of the sky, but you understand the point. You're a trader. You're not supposed to be showing up trying to build a belief system on the charts by getting winning trades and having great months. You're supposed to show up knowing that you will be profitable, you will get results, you will be successful, you will pass your challenge, you will get funded, you will be withdrawing 5K a month in the next 6 months, you will leave your job in 12 months, you will provide for your family, you will make more money than you've ever made before. You don't show up and hope the candles will stroke your ego and build your belief system for you. That's got to happen off the charts. And when you show up to the charts, there should be no questions of, is this good? Is this bad? Is this going to work? Should I do this? Should I do that? You should be so laser focused that you just know that all you have to do is do your job. Press the damn button.
Yeah.
You understand? Now, once you've got this process, which is just the foundation, okay, because there's going to be other things you need to think about here. But as I said, we're not going to have time to go through every scenario, and it's very hard to share every scenario. But what I'm saying is this: you may find that you take this trade 10 times and you lose 7 of them. What is going to happen during that 10 times is you're going to start to identify commonalities with your trading process, as long as you stick to your process, that work and don't work for you. That meaning, out of 10 times, I am losing 7 of these trades, and I mean, you're only going to be -1 R, to be honest with you. So it's not that deep. However, all right, let's just say you lose 9 out of 10 of them. That's tough. But you lose 9 out of 10 of them. You don't flake out after five. You don't flake out after 6 or 7. And technically, you shouldn't flake out after 10. But you lose 9 out of 10 of them. And what you're going to start to see, Daniel, is commonalities with your trading. That is, yes, this candle closed bullish to convince me next candle will be bullish. So we don't digress from that belief. This candle's development formed because it created a bottom wick and flipped bullish, which is a simple process that you must adopt with this concept. Okay. So that's not the issue here. However, what I'm noticing out of the last 10 times is that when there is a consolidation on the 5 minute time frame and price is trying to push above an area of rejections, I find that I'm losing more of these trades than I am winning. For that reason, I'm going to stop taking these trades and or lower my risk of these trades and focus my attention on price action that is more cleaner for me, that I'm observing has a much higher win rate. That being, previous candle closed bearish, it broke below an area in the market, and on the 5 minute time frame, the sentiment of the market is much more cleaner. As opposed to a consolidation where it's messy, it's so much more cleaner. And or price is broken below this level. I see no reason for it to not continue bearish back down to this low, which gives me a range from this point to this point. And this gives me a favorable risk to reward. Plus the candle close much more bearish comparable to the wick. Then you might say, well, hold on a minute. No, I don't want to trade when price breaks the level. I much prefer to trade when price is tapped into an area in the market where it's been failing to break for a long period of time and we get a bullish close. And I've seen that the behavior is shifting from being bearish to bullish. So I'm only going to take trades off of support levels. Or you might say to yourself, I'm not going to take trades if they're in a consolidation. I'm only going to take trades when I see that price is clearly in an uptrend. But you can't make those rules up and you can't make your trading that rigid until you've executed hundreds of times based on your belief system without it being skewed by doubt. And then the world becomes your oyster because the possibilities are endless. So you have to hold on to that belief. You have to execute based on that belief consistently. You have to keep it as simple as you possibly can. And then you will just make adjustments as you go on. And those adjustments will be true adjustments, not assumed adjustments to protect you from the worst case scenario.